Well, this morning we got the Consumer Price Index report out. Did it help rates? Well, we're going to talk about it. It kind of did. It started to help us this morning. CPI came in at 3.2%. That is up from 3% this same time last year. So this is a year-over-year comparison. So this is comparing July of last year with July of this year. That sounds like bad news, but it's really not. We were expecting an inflation report to come in at 3.4% today. We came in at 3.2, which was better than expectations, even though it's higher than where we were this time last year. There is some concern in the marketplace that this number is underreporting both food and energy, specifically gasoline. We have seen gasoline increasing pretty dramatically over the last 3 weeks. When you look at every measure, it should have been baked into a higher number in this report, but the report showed gasoline only up 0.2% in its year-over-year comparison. That may get revised upward. That's one of the reasons that we saw a nice rally initially when this number came out, but we've seen bonds sell off badly since then. Two reasons for that. Number one, the CPI report itself, the internals suggest that maybe a higher number really was warranted and we just didn't get it for whatever reason. This just may be due to some internal metrics that get revised in the future. But secondly, and we've been talking about this, bond supply. We had an auction today that was very poorly attended with bad results. So we are not moving the volume of debt that needs to be moved to finance the shortfall that we have at the national level. So weak bond auction today, y'all, it's just simple supply and demand when it comes to a bond auction. If investors aren't interested at the current prices, then those prices have to come down. And if they're not interested at the current yields that they're going to be earning on that fixed income security, then those yields have to go up. That's why you see yields move inverse to the price on fixed income securities like mortgage bonds. And we are seeing that here. Bonds are going to have to find their footing at a level where investors are interested. And we are not seeing that in today's auction. That is weighing heavily on bonds. We are seeing a very sharp sell-off and seeing rates headed higher. So tomorrow we're probably going to be significantly higher than we are today. In fact, most lenders have already seen enough movement to have repriced for the worse. So kind of a rough day for mortgage bonds and for interest rates. Here are the averages. Mortgage News Daily had us through yesterday at 7.05. I suspect that number is going to be higher when we update for today's movements. Last Thursday, we were at 7.2. 30 days ago, we were at 7.12 in that Mortgage News Daily tracking survey. So we've seen interest rates over the last 30 days come down a bit, but we may have given that back based on today's movement. We'll have to wait and see for next week's call, and I'll report back on that. Freddie Mac has us at 6.96 today. Mortgage Bankers Association 7.09. So most lenders are sitting right in the high sixes, if not tipping the lead over into 7. However, as we have said on many occasions, most buyers are paying some discount in order to buy this rate down. And we are certainly seeing discount pay a really nice premium off of these highs. In other words, you can buy a lot more rate reduction for a point than you can in a normal market. And right now that is certainly true. It changes daily, but this is one of the areas where consultation with a borrower is so important. I've got a number of tools that I use. We do a total cost analysis for that borrower so they can see several different options before they lock in a rate to determine which is the best bang for the buck. And I put all of that, we chart it, they can see them side by side. I go through it with them together. This is just an email link that I send to them, and they can view these things in real time with me. I can literally highlight them and show them the variances between what paying a point would give them, what paying 2 points might give them as far as reduction, and how quickly that would pay for itself. That is something that we do. You can probably tell from these calls, y'all, I geek out on the numbers. I do that with your clients as well to make sure they're getting the best possible combination to fit their needs. So in any event, hope this information is helpful. Rocky road today, but we'll see what next week brings us. Stay blessed, stay safe. My contact information is on the screen. Always blessed to have your referrals. We will talk to you next week.